Let's discuss the first quarter's milestones. Robert Shapiro, chairman of the economic consultancy firm Sonecon, former U.S. Undersecretary of Commerce. He joins us now from CNN, Washington, and good to see you. When I look...
Pleasure to be here.
When I look at these numbers, and look, we know the reasons why markets, the Fed, low yields, bonds, we know the reasons. But, Robert, it's still remarkable that we have this disconnect between markets and the real economy.
Well, actually, there isn't that much of a disconnect because you have to invest the money somewhere, and so you look at relative returns. If you're investing in an advanced economy and you look around the world's advanced economies, you don't want to be in Europe, you don't want to be in Japan. That is, you don't want to be in places that are actually in a recession. You want to be in places that are expanding, even if they're not expanding that quickly. And that brings you to the United States. So then your choice is equities or fixed income instruments, bonds. Almost no return from bonds. There's nothing left but the U.S. stock market.
But that's a...
And in fact...
that's a great argument, or it's a great reason for why the market has rallied in such a dramatic fashion. But it doesn't address the point that the underlying fundamentals do not justify this sort of rally.
Well, I actually don't agree with that. I think the underlying fundamentals in the U.S. economy do justify it. The pieces for the elements for a much stronger recovery are in place. We have business with enormous amounts of resources for higher investment. We have consumers whose debt burden is back to normal, whose wealth is no longer evaporating with declining housing values, and who have enormous pent-up demand. So, in fact, we have the Fed, who is committed to maintaining very low interest rates for both business and consumers for at least the next 2 years. So, in fact, I think we do have the fundamentals for a stronger recovery.
And if we now factor in, since you're in Washington, let's deal with the grief at hand. You've still got the debt ceiling to sort out, but the sequester is working its way through, and we're going to see the furloughs take effect. Yes. Now, is there a view now that this is a cake that's baked and baking, let's just let it play itself out? The sequester has happened, nobody's going to reverse it.
Well, I'm afraid that may be the case. That does seem to be the atmospherics, at least, in the debate here. And I say I'm afraid so because the economy, this stronger recovery has not kicked in. The last thing we need is government withdrawing demand from the economy. That's what has driven Europe, in part, back into recession. So I think it's a bad thing economically, but I think you're probably right that they've moved on to other things, and they're now assuming the sequester, at least for 1 year, in the baseline that they will argue about with respect to the debt ceiling, with respect to which they have already done with respect to the continuing resolution. So I think it is baked in at least until September, the end of September.